Okay, there we go. I don't know, but meet Kevin. Big video over the weekend. Let's talk about it a little bit. And I have a lot of interesting stuff that I want to teach you guys today. I want to talk about jobs. I want to talk about, there's a lot of people that are just throwing out a lot of BS on YouTube and really everywhere. So, hey. Yeah. Bye. That was Seth. So I want to teach you guys, and we're gonna get some drawings going. Let's do it. All right, guys, let's get going. So futures up as usual. NASDAQ's down a little bit, and that's kind of one of these correlations that I want to make. What we got going on with the NASDAQ. So let's do some news first, and then we'll go from there. So can you talk about copper commodities? I'll talk about a little bit of. I'm going to talk mostly about gold, but let's start with Ford. So everybody knows, well, I don't know if everybody knows, but Ford's a stock that I'm watching, and I'm not watching it for the reasons that everybody thinks that I'm watching it for. I'm looking at this for a very, very long-term play, and I mean, I look at it from a value perspective, but from a trading perspective, I do like it, but I don't like it right now. Let me pull up the chart for you on this Ford real quick, just so I could show you guys what I'm looking at. So Ford right now, this looks terrible. The stochastic is terrible. It's under moving averages. Everything is just terrible about it. So you're probably saying, why am I looking at it? Because this is one of those ones that I would like to catch somewhere down here, maybe below around the 200-day moving average, and ride this thing back up. Unlike what me, Kevin, probably thinks, Ford is not a dead company, and Ford is going to be around for a long time. So they recall 661,000 of their Explorers. Thank you, Des. 661,000 Explorers have been recalled, and the only thing I want to point out about this is that it happens. It happens, but when it rains, it pours, it seems. So when you have a lot of bad news coming out about Ford got destroyed on their last earnings call, but they're going to recover. I mean, they've been around for how long? They sell how many vehicles a year? They actually are a good car company that actually makes consistent money. So they're going to be recalling a lot of vehicles. Oh man, almost 700,000 vehicles, but it's okay. It happens all the time in the car industry. It's because of a roof rack that is flying off. There have been no traffic accidents from it, no deaths from it. So they have gotten ahead of this extremely well. Go ahead and replace your roof racks and move on. That's what they say. Just move on. So let's do Walt Disney World. So Disney is coming out with earnings. Maybe it's today. We'll take a look at the earnings report like we always do. But they're relaxing their theme park COVID restrictions, whatever they have going on there. So they are going to be phasing out the temperature checking. I guess they were. So I've never been to Disney. I don't really think I want to go to Disney. But they, after May 8th, oh, that was 2 days ago. So they're going to be, no, workers don't have to be screened anymore for fevers. And for park visitors, it's going to be May 16th. So good thing is they're relaxing about this stuff. The bad thing is, I mean, they still have stuff in place. You know what? I don't watch baseball. I used to watch a lot of baseball, and I was telling somebody last night, if you would have told me 7 years ago that I wouldn't be able to name every single lineup in Major League Baseball today, I would have thought that you're a crazy person. But here I am. I don't know. I didn't know half the players that were in the lineup. Smash the like button while we're at this. But last night I was watching the Braves versus the Phillies, and the game was in Atlanta. 100% capacity, no masks required. It looked like a game that I was watching from 2019 or 2000, anytime before 2020. It was great. Georgia was one of the first. Actually, Georgia was the first state to just loosen up everything. Brian Kemp, the governor, said, yeah, we're done with this, and he's moved on. And you look at what's happening in California and New York, COVID numbers are pretty much the same. So, moral of the story, open up your states. Anyways, recent theme parks have began allowing guests to remove their face masks when taking a photo outdoors if they are physically distanced. Previously, they were only allowed to do that when they were eating and drinking when visiting a relaxing station. How cute. All right. So I think that was it for Disney. Disney is Disney is one of those stocks where everything was so bad for them. You basically eliminated 40% of their revenue from theme parks, cruises, etc. Anything that has to do with a person going there. And the stock price is just going higher and higher and higher. It's truly incredible. Where is my internet page? Here it is. Let's go. I want to look at stock twits real quick. I want to see what earnings are being reported before we do this incorrectly. Disney is Thursday. Okay, so Disney is Thursday. While we're at this, Virgin Galactic today, Workhorse and OVO, Roblox, Occidental, Wynn Resorts. Let's see what's tomorrow just to get you guys prepared. Palantir, Chesapeake, Fubo TV, EA Sports or EA Games or whatever the hell it is. All right, there you go. So don't get caught in earnings if you're doing something like this. What else do we have? Let's do the last one, Workhorse. So this is just a funny one. I really don't care about this. I couldn't care less, but today was a slow news day, and frankly, I'm not talking about Dogecoin and Elon Musk and SNL. I have no interest. If you want to go look it up, have at it. Workhorse hasn't challenged the UPS contract, so this is where I found the story funny. Where is my pen? Workhorse hasn't challenged its failure to obtain the USPS contract and may be running out of time to do so. It's probably because they don't have anything to make with. Workhorse was among the bidders. This is great. Workhorse and Oshkosh were among the bidders to replace the Postal Service white right-handed delivery vans. They forgot to point out a minor detail. They were to replace 10% of their white right-handed drive delivery vans by the year 2035. 10%. I don't know. Maybe they conveniently left out that port. 10%. 10%. They were going to replace 10%. The government is going to be saying, we need electric vehicles, this and that. Let's give out tax credits, this and that. And then you want to come in, and by 2035, last time, that's like 14 years from now, they want to replace 10% of their vehicles. So all of this clean energy, this BS that they try to shove down your throat, 10%. Okay. That was 65,000 vehicles. Maybe Teslas will just replace 100%, and that's how they'll get to $1 trillion in profit. That might work. Man, I think I'm onto something here. Okay. Yeah, that'll be good. All right, so we did this Meet Kevin video over the weekend, and this guy decided to respond. Someone made fun of me. Okay, someone made fun of you. We didn't really make fun of you. We just called you an idiot. They said I was ridiculous because I said Tesla might grow at 42% in 2024. Meanwhile, Tesla expects 50% growth. You're literally going to go to a company and say Tesla expects 50% growth. Elon Musk I love Elon Musk, but he is a crazy person. Elon Musk could very well come out tomorrow and say, I expect 150% growth. And I mean, they said I'm too bullish because Ford is not growing anywhere near that. We didn't say that. What we did was we made a comparison of how many vehicles that Ford makes and Tesla makes and will make and their projections and this and that. Now, all the experts come out of the bag. This guy is so stupid. I don't understand. I have said it so many times this weekend. This guy just doesn't. I just don't get it. I don't understand. I feel so bad. You know what? I do feel bad for the people that follow this crap. I don't feel bad if you see a channel like us and then say, you guys don't know what you're talking about. You guys aren't critical thinkers, this and that. Kevin, we've been doing this for a lot longer than you. Mine and Paul's net worth is a lot larger than yours. Mine and Paul's net worth didn't come from Tesla. I think I made $60,000, $70,000 off of Tesla back in the day. That makes up, I'm not going to get into that. So we're not just fanboys of some company and say that this is going to go to the moon, that's going to go to the moon. All the experts come out of the bag and say high growth strategies like Cathie Wood or Tesla when these strategies hit bumps. We've been saying this I'm not knocking the guy. I don't expect him to go back and watch all of our videos. But when it hits bumps, just because they're hitting a bump right now isn't the reason that we're doing this. We have been saying this since 2016, 17, 18. This is nothing new that we're just saying, oh, Tesla's a little bit overpriced right now. They're the same people who say, oh, that person got lucky. You got lucky. You're a moron. You can never win against these toxic, jaded losers. Suck it, Meet Kevin. Suck it. On to the next. Let's pull up the drawing board. And instead of me shoving BS down your guys' throat about nonsense, I'm going to actually teach you something that actually makes real sense. And Kevin, if you're watching, maybe you can learn from this. And but you probably won't, because you probably think that I'm an idiot and I don't know what I'm talking about, even though I've been doing this for a lot longer than you and I haven't made all my money on hype stocks. Okay, so let's talk about the jobs number that happened last week. Jobs. Because ESC, my net worth is bigger than Kevin's, and I'm not revealing it because I'm not some egotistical idiot like him that needs to sit there and tell everybody that I made $20 million off of a stock. It just doesn't. What does that do for me? We're here to teach you. I'm not here to brag about my net worth or Paul's net worth. We're here to teach you guys a process. It really doesn't matter if we are going to be comparing it. It's not a demeasuring contest, but if it is a demeasuring contest, I'm going to win. All right. So jobs. This is the pandemic. Boom, boom, boom. We lost a ton of jobs. Kind of went into this bucket of demise. So then we come in and we start getting a little bit of recovery. So we start getting new jobs. Ooh, new jobs coming in. Oh boy. Oh boy. Look at this. It's going, baby. New jobs. Everybody's so excited about these jobs coming in. All right. Then they come out and they say their projection. Boom. We're going to get 1 million jobs created in the month of April. This thing is just going to be amazing. Now, let's come to reality. Oh, we only created 266,000 jobs. Steve Leishman, I was watching him on CNBC. Steve Leishman came in and was like, when he read the jobs report, he goes, 266,000 jobs just came out. Hold on, I need to double check this. I don't think this number is right. Listen, buddy, the number was right. When you don't open things up, it ain't gonna work for you. When you want to go look at states like South Carolina and Montana, they're gonna be the ones that are gonna have the higher numbers going forward as far as unemployment. So the problem is that these jobs, you were creating jobs, but you were still losing jobs in this area. So you can't just go out and just magically make 1 million jobs. It just ain't gonna work. So these jobs that were lost, there were still more being made. Some came back. This is what you thought, 1 million jobs. This is what you got in reality. What's the solution? Let's go print some money, baby. All right, next. Guys, this is something that you need to pay attention to. So Yahoo Finance does a great job of this. Every Monday, they give you a calculate a calendar of what numbers are going to be coming out. So let's see. This is what you need to look at, and this is very important. So we're going to look at some correlations of sectors. So you have the Dow, okay? The Dow indice made up of the Dow 30. So you have the Dow going up like so. Next, you have transports. So what are transports? Transports are your trucks, planes, etc. When you're making goods and going forward, okay? This is what you need to look for in the transports market. And IYT is the S&P transports ETF. So if you want to follow that, go for it. Just keep an eye on the transports numbers that come out from the Department of Labor and Statistics and all that. So transports, you get going up. It's following the Dow, and then all of a sudden, transports just start to fall off a little bit, and they start turning around on you, and the number starts dropping. What does that mean? That means that we are starting to have, this is transports, we are beginning to notice that they're building more products than they can sell. That's why we're not transporting as many goods. So when you continue to see the market just going up, and the transports number just slows or starts turning in the other direction, that's when you know that there's just something that you need to be paying attention to. guys, this is a number that I'm going to keep focusing on because it matters, and it's not something that a lot of people think about. When you have a slow in transports, that means you have a slow in goods. That means you have a slow in people going out and buying things. That means that, and the market keeps going higher and higher. It's not good news. It's just another correlation to add to the bucket of everything is getting into this wild bubble. If you listen to the right people. That's awkward. All right. Interest rates. Of course, we know interest rates. So, interest rates, we need to pay attention to the interest rates. These are the rates. And I want to pay attention to the utilities companies or utilities sector. Utilities. I can't wait to have my iPad. I think it comes next week. So why are we looking at this? Because utilities borrow a lot of money. They take on a lot of debt. When you start seeing a slowing in utilities, when you start seeing utilities starting to drop, you need to pay attention. This is another thing. Transports, utilities. The utilities ticker is XXX. I'll figure it out for you guys. There's only 11 sectors. Go to the S&P Spiders ETFs. Look at them. Find the utilities one. Boom. There you go. Next, I want to look at inflation. Then we're going to look at everybody's favorite, gold. Okay. Inflation. You got inflation going up, even though they say there's not really any inflation. I'll argue with you all day that there is. So inflation. Okay. Let me read these stats to you this morning. Simple Saturnine. Yeah, that it's XLE. That's correct. Oil up 166%. Gas up 73%. Pork up 58%. Chicken up 23%. Beef up 74%. Wood up 300%. It's really weird that Jerome Powell says that we're not really getting close to 2% inflation, especially when you just come out and you keep just printing and printing and printing and printing. I'm no math genius. You guys know that. But I think that more money you put into circulation creates the dollar to be worth less, which then creates inflation. And I think we're seeing it in these prices. But just ignore that. We don't need to worry about that. So, you know who's getting screwed from inflation? It's Main Street. It's us. With all of the Wall Street's getting more wealthy off of inflation. It ain't us. Well, it is, but it's not to the levels that they're getting at. So how do we combat inflation? You got to increase the yields. That's why Janet Yellen probably said that last week. She realizes behind closed doors that we are getting an increase of all of these products. I mean, it's not that difficult to see. So guys, you got to keep an eye on inflation. Just keep an eye on those individual numbers. If you guys prepare yourselves, people were asking me, how do you prepare yourself for a crash, this, that? If you guys prepare yourselves and you just start paying attention to these little things, all you need to do is start looking at, enter name. Thank you. That's energy, not utilities. Good call. If you start looking at these numbers individually, you'll just see that there's inflation there. You don't need to go and listen to the Fed make up their BS about there no inflation, this and that. We keep interest rates at zero. We print more money. Bob, thank you. XLE is not utilities. Thank you for that. Go and find what the utilities sector is. I just can't remember the one off the top of my head right now. But that is that for utilities. I mean, inflation and yields, etc. So let's look at gold. Everybody wants to look at gold. And I don't blame you. I have a large position in gold. It doesn't make up 49 or 48% of my, or 80% of my portfolio. But maybe it should. Can somebody tweet Kevin and ask him if I should put gold as 80% of my portfolio? Yeah, just make sure somebody please tweet him and ask him. All right, here's the dollar. So when we have the dollar where it is, okay. When the dollar falls, guys, what happens? You have gold go up. And when you have inflation going up, gold goes up. So when you have gold going up, it's not good for markets. I mean, gold has always been the hedge against what is happening in markets. And guys, smash the like button for me while I'm teaching. I haven't talked about that very much. But yeah, so what's going to happen? Guys, gold is having its little spikes here and there every so often. The central banks are going to come in and they're going to keep trying to suppress gold. When you start seeing that gold is going, people get scared because they look at it as the hedge against inflation. They look at it as a hedge against markets going higher, and the hedge against markets going lower, etc. So when the central banks and countries they see that, they are going to start trying to bat down gold. And we're seeing that gold is rising right now. We have a lot of people in the Bid and Ask Nation that were trading gold last week. They were up 5% on it, etc. So overall, guys, what I want to say is that when you look at the market right now, it purely comes down to the fact that this is a confidence game. When you have, all you're doing is looking for, people are either confident in the market or they're not. So how are you going to outlast the confidence game? Listen, look back 8, 9, 10 weeks ago, whatever it was, when the NASDAQ was falling apart, just because you had literally less than 10 basis points drop in the 10-year yield. When you have that going on, just a 10 basis points drop in the 10-year yield can shake markets like it did. Guys, there's not very much confidence in this market if that's the little tiny thing that shook markets. It's going to be bad. It's eventually going to be bad. I don't know how. I mean, last week you had the president come out on Friday and he said, "Don't worry, help is on the way." When Ronald Reagan back in the 80s said the nine most terrifying words are, "I'm from the government and I'm here to help." Different strokes, different folks, different times. So that's that. So let me talk about, this is something, I know we got a lot of new people out there. I want to talk about, kind of just wrap it up, my morning routine, how I get started, how I find stocks, this and that. But before I do that, I want to push our Patreon a little bit because this thing is phenomenal. This is going to help you guys so much when markets are crashing. Learn the process now. Remember, we are here to teach. We're not here to brag. We're not here to talk about our wins, our losses. We share our portfolios, this and that, but we're very long-term investors with the exception of the little bit of trading that I do. Simon. Well, whatever. Hold on, Simon. So this is our Discord, guys. These are the two that you want right here. You want to be in our $23 a month Patreon, which gets you access to our software. You get access to mine and Paul's portfolio. You get some discounts on some of our merchandise. But this one, if you're interested in trading and if you're interested in talking to me, this one you get no exclusivity to me or Paul, with the exception of a fireside chat once a month. This one, you get to talk to me every day, all day, every day. Lucky you. And we have a great community. It's over 300 people right now. I mean, it might be more than that. I really don't know. It's just incredible. We talk trading. We pull up charts. I can show you. You get access to everything that I do on a daily basis, and you get our Everything Money software for free. And with that, you also get some discounts on merchandise greater, and more importantly, you get private seminars with me. I talk about day trading, long-term trading, shorting, options, all of this. Anything you guys want to talk about, I typically say, all right, let's do that seminar on a Friday for this level only. So you guys, and you get access to the Bid and Ask Nation after hours chat, which is really something to get to, something to watch. That alone is worth $65 a month. All right, Simon, good question on gold. So what would I buy? I would look at gold, and I would also look at miners. AUY, GDX, GOLD, GLD. You can't go wrong with any of these ETFs. I'm not a big buyer of physical gold. That's just not my thing. But yeah. So what do I do when I first wake up in the morning? I open up the Department of Treasury website, and the first thing I always want to look at is what the yields are doing, the 3-month yield and the 10-year, because I'm looking for yield curves. So maybe tomorrow I'll talk about, excuse me, the yield curves. But these are very important things that I check on every day. And once these numbers, they're not doing very much right now, but if you go back to last year when everything was falling apart, that is when that's when we saw a lot of things happening in with the yields and the rates. And it's a lot of fun, but it's important to know. What gold ETFs am I in? I'm in GDX and GDXJ. And I also own some AU in one of my father's portfolios. Is that the new name for Seth's beard? Yeah. Oh wow, Dan, you are really an OG. All right. Next thing I do. What do I do? So I go to my earnings calendar, and I just want to check my earnings. So those that are new, I don't want to be in stocks on earnings because of who knows what they're going to do. Gap up, gap down, doesn't really matter to me. I just don't want to be in them. I'll wait for everything to calm down and go from there. Can we clip the last minute you were talking about the Patreon? Yeah, Nick, go ahead and talk to Tim and do that. Then what do I do? So then how do I find stocks? That's the real thing. And I'm going to go a little bit past 9:30 today because I've just been talking a lot and I want to show you guys this stuff. So how do I find stocks? So typically what I do is I like Yahoo Finance just because I like the organization. Paul hates it, and he's probably going to complain any second. Markets, I go to the most actives, and I just want to see what's moving that day. And that basically means what has the most volume. And I'll pull up the top, say 25, and then I'll look at it the next day and the next day and the next day. And we will see that which ones are up there every single day. If you want to trade hype, go ahead and trade hype. If you want to trade stocks like Apple and Ford and Bank of America, you can go ahead and do those things. But this is where I find it. I look at volume. I see what has the most volume, what's the most consistent throughout a week, and go from there. If you want to be a day trader, I go in and I look at the top gainers. So let's see. This thing, I mean, the market's not open. It opens in 40 seconds. But you can go look at, if something's up 73%, go ahead and try to trade it and make a couple percentage points off of it. That's all you got to do. Let's see here. Hey, Winsy, I want to see all this. I want to see all these arguments that you're making because I can't imagine that you could put very much logic behind them except for emotion and hype, but I would like to see them. So, that's that. Okay. Let's see. The next thing I want to talk about. So that's pretty much my process for the morning. Go in there, find tickers that for your long-term stuff, go into the most actives, follow some stocks, see which ones pop up in that top 25 list over and over and over. Maybe that's how you stick. That's how you, good volume stocks. That's how you stick to them. And then when you want to do some day trading, you go look at the top gainers and top losers if you want to short, and go ahead, find things that are killing it, and go and try to grab 1 or 2% out of those. So that is that. Next, I do want to talk about gaps. And I want to talk about gaps. This is actually a suggestion from Nick, Dads with a Purpose. And why don't I trade pre-market? I don't know. I don't know how to trade pre-market. So let's talk about gaps and what they are. Guys, everything that I talk about on a chart is in the Trading 101 series for the Bid and Ask Nation, for Paul's Super Shorts. You guys get access to this. And I go through every definition that I'm talking about in here. You guys will know. If I talk about long wicks on top of candles, you'll know what it is. If I talk about gap ups, gap downs, stochastics, sweet spot reversals, moving averages, volume, head and shoulders patterns, anything of this, you guys will know what that is. But it's exclusive material. Though I want people who are actually serious about trading And if you're not serious about trading and you want to try it for a month and see if you're serious about trading, join the Bid and Ask Nation, get in there, make some money for a month, and see how it goes. So gaps. So this right here is a gap. It basically what it is your stock price closed right here. This is the day that it closed. Then overnight in the aftermarket and pre-market, the stock price dropped and it opened up down here. So you have this massive gap. Now, gaps are good because we know that often gaps get filled. So eventually, and this is why I like Ford right now. Well, not right now, but eventually I'll like Ford, is that you can move up like so, and gaps often get filled. Now, they can get filled in a week, they can get filled in a year, but they're probably going to get filled. So that is gaps. This is why I like gaps. Now, when things gap up on you, I don't necessarily, that's when we go and take profits. If you're in a stock, let's see if we can find a nice gap up. Let's see. Aha, right here. So this was Ford back in January. You had a pretty nice day right here. Next thing you know, the stock price gapped up on you and it moved really high. To everybody in the Bid and Ask Nation, I would have said, yep, we're selling there. We're going to take our profits. We're going to move on, because after big runs like this happen, typically, boom, we get a drop back, fall back, and that gap is filled to the downside, like I said. So that is a little bit of explanation of gaps. There's a lot more to it, but that's it for now. So that's it, guys. I see that people are arguing in the chat. Smash the like button while you're at it. I am going to leave the chat up, I guess, and see what this Winsy guy has to say about $6 trillion valuation on Tesla, and we will go from there. So you guys have a great day. I will see you tomorrow. I will talk about the yield curves a little bit. I kind of like this teaching thing that I'm doing here, and let me know if you guys like it, and we'll go from there. So keep destroying other fake YouTube investors. Those people aren't investors. What did I call Meet Kevin this morning? I called him it wasn't even mean. Hold on a second. Let me see here. It wasn't even mean. It was, oh my God, the Bid and Ask Nation is so active this morning. This is crazy. And the markets are open. I wonder what the markets are doing. Let's check what the markets are doing real quick. Dun, dun, dun. Okay, here was my point. So my point was, what I said to the Bid and Ask Nation was, well, Seth has a Tesla. Nicole is getting a Tesla. I love Tesla. I think Teslas are awesome cars. But these people are so biased that they can't even acknowledge that even though the car is sweet, the company can't be bad. For example, Shopify. I love Shopify. I think it's phenomenal. I wouldn't invest in Shopify. Square, amazing company. I ain't invested in Square. The list goes on. And these people are always so hurt because all they know is emotion. They know that if they buy something, it might go up 500 times or whatever. And they're called hype dorks. That's my new name for them. Hype dorks. They're not investors. They don't know what they're doing. And that's the end of that. So you guys have an excellent day. Go make some money. Join the Bid and Ask Nation. And I will see you. Oh, Fireside, Patreon only. Chat with me, Seth, and Paul this Friday, 6 p.m. Eastern. You guys have a great day. Bye.